own your own business and are self-employed, you may be wondering how hard it is to get a mortgage. This is Parker Couch with Homestar Financial, and today I'm going to talk about loan program options, qualification, and requirements for self-employed borrowers. Traditional W-2 wage earners are generally able to qualify for a home loan by simply providing copies of their W-2, tax returns, and verifying that they have a job. But when you own your own business, things become a little bit more complicated. In this video, we will break down some of the general requirements in place for self-employed borrowers to qualify for a home loan. You will want to check with your lender to find out more specific loan programs that they may have available. But as a general rule, let's dive in and look at what you will need if you are self-employed. We'll begin with an especially important rule, and that is verification of how long you have been self-employed. Most lenders and loan programs require that you have been self-employed in your current business for a minimum of 2 years. Self-employed mortgage rules. Now, lenders define self-employed as a borrower who has an ownership interest of 25% or more in a business, or one who is not a W-2 employee. However, there are exceptions to the 2-year rule. You might qualify with just 1 year of self-employment if you can show a 2-year history in a similar line of work. You'll need to document an equal or greater income in the new role compared to the W-2 position. Some lenders will even count 1 year of related employment plus 1 year of formal education or training as an acceptable work history. If you've been self-employed for less than 1 year, you're not likely to qualify for a home loan, and that's universal for most lenders. But if you meet the self-employment history requirement, then the next thing that your lender is going to ask for is 2 years of income documentation. This typically means 2 years of tax returns. This is where most self-employed borrowers really throw up their hands and say, I don't have 2 years of tax returns, or I don't have a lot of income because I wrote most of everything off. Now, there are many loan programs available today that will verify your income based off of your bank statements. So don't throw in the towel just yet. There's a path forward, and you'll want to check with your lender to find out what loan programs they have available. The next item we will talk about in this video is self-employed borrowers' income. Mortgage lenders will generally consider any source of income that is stable, consistent, and ongoing. That means all kinds of self-employment income is eligible for mortgage financing, including, but not limited to, business owners, freelance income, contract work, seasonal work, gig work, or side jobs or side hustles. And these types of income can be considered on their own or as additional funds on top of a primary income source. Lenders will sometimes even count unemployment income for contract or for seasonal workers with a regular documented history of receiving unemployment in the off-season. For any source of income, a lender must determine it will be ongoing. Generally, this means the income seems likely to continue for at least 3 years after closing. A history of declining income will not improve your chances with a mortgage lender. For self-employed borrowers, a lender may conduct a review of the borrower's business to determine if it's stable and the likelihood that the income from that business will continue at that same level. If you're in a declining industry, such as a hotel owner during the COVID pandemic, or maybe a builder during a housing crash, this could pose some really serious problems with your approval. Underwriters use a somewhat complicated formula to come up with qualifying income for self-employed borrowers. I keep using quotation marks because they'll start with your taxable income and add back certain deductions like depreciation, since that's not an actual expense that comes out of your bank account. Business owners and other self-employed workers often take as many deductions as they can. Now, while this can save you a ton of money come tax time, it can also really hurt you when it comes to your mortgage application and the chances of actually getting a loan. There are many new bank statement loan programs that are available today, and these programs are often called non-qualified mortgages. This means they lack some of the consumer protections of major loan programs and usually have higher interest rates. So, how will your lender actually document your income? Documenting self-employed income, in most cases, self-employed borrowers need to provide the following documents to prove that their income is real, right? So 2 years of personal tax returns. You'll need to give 2 years of business tax returns, including Schedules K1, 1120, 1120S, your business license, your year-to-date profit and loss statement called your P&L, a balance sheet, and a signed CPA letter stating that you're still in business. These documents can be prepared by a certified public accountant, an accountant, or a tax preparer. If the business is a sole proprietorship, that means it's not a partnership, it's not a corporation or an S Corp, you may not have to provide business tax returns. If you've been self-employed at the same business for 5 years or more, you may only have to provide 1 year of business and/or individual tax returns instead of just 2. Income inconsistencies. Let's talk about that. Now, if your income is not regular or reliable, lenders generally won't count it. The income has to be reliable. However, many businesses go through ups and downs, and you should also prepare to explain any significant year-over-year decrease in income when you apply for a mortgage as a self-employed borrower. And listen, you don't have to own your own business to be considered self-employed. You're like, what? Well, a lender will likely consider you self-employed if you own 25% or more of a business, if you do not receive a W-2 tax return, if you receive 1099 tax forms instead, or if you're a contractor or a freelancer, or at least 25% of your income is from self-employment. The last is most of your income, if it comes from dividends and interest, self-employed. If you're part owner of a business, but your share is less than 25%, you're not considered self-employed for home loan purposes. And remember, you are not required to report self-employed income under Fannie Mae and Freddie Mac's lending rules. If, though, you have a freelance job or small business on the side and you don't need the income from it to qualify, your lender can just ignore that kind of side hustle income on your app. And you may be wondering if you can get maybe a joint mortgage if one person is self-employed. Great question. Well, maybe you want to apply with a spouse or a co-borrower, but one of you is self-employed and the other is, more traditionally employed, receives a W-2. Most mortgage lenders will be fine with this, provided that the self-employment income meets the guidelines and that both applicants meet the same loan requirements. You also have the option not to count your co-borrower's income source if you wish. Let's say you just wanted to use their credit. And if you qualify for a loan with your own income and your co-borrower is self-employed, your lender can just ignore that business in underwriting. But why would you want them to ignore that business? Another good question. Well, because many small ventures or even larger startups, they actually don't show income on tax returns. They might even claim a loss. And if you're claiming a loss, at least on paper, now these business write-offs are great for reducing taxes, and they can reduce your qualifying taxable income when you apply for home financing, and that's not so great. And if you're self-employed and you want to buy a home, it does help to plan in advance, and working with a mortgage professional and involving your accountants as well is a great idea. Self-employed borrowers have access to these same mortgage programs and the same low rates as other borrowers in today's market. Be sure to work with a lender who has a loan program option for self-employed borrowers. Thank you so much for watching. This is Parker Couch with Homestar Financial. You can connect with me at parker.couch@homestarfc.com, or you can call and text me at area code 770-540-4936.